Recording. Yeah, right. So it's gone up here, right? It's created a high.
Yep.
It's dropped down, right? So we have a breaker structure, yeah? Breaker structure, right?
Yep.
There. Okay. But then she's failed to create a new higher high. Okay.
Yep. No, it's created a lower high, but it hasn't created a lower low.
Yeah. So because she's failed to create a higher high, she's created a higher low after the breaker structure. That's where Matthew would want you to come into it, because you've come up here, all right, and then you've broken structure, okay. So then your entry point will be here.
Ah, right. I follow you.
It'll be that point, because if you've got structure,
and so that would basically be
doing that, all right, like what it's done there.
And that would be your entry point would have been like the bottom of that blue candle, eh?
Yeah, it would have been.
Yep.
There, and what we could do is you go.
Oh, there would it?
Yeah, your entry would be around here somewhere. Because, I mean, this might not be a terrific example, but essentially, that there has, that blue candle there, that's where it's reacted off the 30-minute. Yeah. Off the 30-minute, it's come into, because it's broken structure here, okay?
Yeah.
Because it's broken structure, it's then become bearish.
Yeah. That makes sense too. You can see there going off that, and it's then reacted, hit that point, and gone back down to where the breaker structure was.
Yeah, so so that's what Matthew was saying, is like they've created. So you've created a high, low, high, and then a lower low, all right, which has gone underneath, which is broken structure here. So
yeah,
to follow structure, it then comes to here, and then it goes further down. Well, it should.
Yeah.
And so that's where he was saying, what is dealing with this bloody bad boy? So that's where he's saying your entry should be here.
Yep.
You know what I mean? There should be some kind of candle within
an indicator there.
Yeah, within this moment.
And so in terms of finding that, like if you were trying to place that trade at that time, how would you know what time frame is your best to go off?
So the boys recommend starting, okay, you should just stay to the 1 hour. All right, 1 hour, 30 minutes, because for this entry example, you probably have to break it down to the 30-minute, and you'd be like, right, that's the last down candle, the last up candle before this down move. So you'd be like,
so why would you have to break that down? Like, why could you not do that off the hour? Or you could, but it just wouldn't be accurate as much.
Well, it's for just a visual thing. You can't see. You can see that blue candle. Yeah, you can actually see that blue candle. If I go to the 1 hour, see, you don't see it. You could go off.
So you just see a big.
You could go off this candle, essentially.
But it would have got you in heaps earlier, and you would have had a heaps bigger stop, hey?
Yeah, you would have just had a bigger stop. Like you would have had.
If you would have got into the market earlier, and you would have had a heaps bigger stop.
Like that's 27 pips,
Yeah.
Whereas if you drop down to the 30-minute, say, you'd then bring it to 20 pips. Oh, no, less actually.
Yeah.
16 pips. You know what I mean?
Yeah. So it's just more your accuracy around your stops that it helps you with.
Yeah. That's the only reason we drop down in time frames is to get tighter stop losses.
Yeah, right.
Which just produces more profit, But when you're starting, okay, when you're starting out and you just want to, you want to get some wins up your belt, you could just put that there and you just go right 1 to 3. You know what I mean? Targeting these lows. Like there's still a 4% increase. on the account.
Targeting what lows were you targeting there?
Well, you could be targeting down to here, but it didn't do it. So if you were to be wise, you just go 1 to 3, for instance, which is at the bottom of that candle, say.
Yeah. Would you not target the breaker structure? See where you've got the base of your red arrow there?
Yeah.
Would you not target like that point?
Well, no, it doesn't matter exactly where it breaks structure, but you got to look at for things like imbalances or like there's a really good target. Look at that. See them higher, them equal lows.
Equal. Yep.
You know, that would have been a really good target. You know, you'd be like, right, like if it's going to come down, it's more than likely going to take them out. You know what I mean?
Yeah, right. Yeah. Yep.
And then that's where, like, see where you've seen that, how we put the square there before in this look here, and then we look left.
Yep.
Well, there could be targets down here that it's gone into, but to be safe, you know, to be on the safer side of things, you just be like, all right, look, like that's almost a 4.5 to 1.
Yeah.
If you're going off higher time frames.
Yep.
So if you were, for instance, to take that same trade, okay. If you were, for instance, to take that same trade, what you could do, and this is what Matthew suggests, is, hold on, I'm just going to go back so it makes it a little bit easier for us to see. So Matthew suggests, so what you do, you get your point of interest, right? So our point of interest at this present time is that candle.
Yep.
Okay. So she's broken structure, and we're going, all right, that's the last up candle before this down move. To break structure, that's an important thing as well, is like make sure that that's the last candle before it breaks this structure.
Yeah, radio. Yep.
You know what I mean? Because that's actually something I've only just recently learned, and it's really beneficial. So then once it's coming up,
so what you're saying there, basically, see how you've got your big institutional green move down.
Yep.
If there was another blue halfway down, that would be the one you'd go off.
You would mark that up, yeah, and then you would see.
It would be your point of interest.
It would be a point of interest, yeah. And then you would see what would happen in that area. Like if just argument's sake, there's a blue candle here, you'd see what would happen in this area to determine whether or not that is the actual point of movement, or like what it's going to react, the actual point of reaction.
Yep.
So what Matthew suggests there then is you find your point of interest, which is that candle, all right?
Yep.
And to get to that candle as well, you just go, oh, all right, like you visually see that those are two really big candles. You know,
yeah.
You're like, oh, so something's happened here, and it's broken past that structure. So
then you just break it down a little bit more to see what happened.
Yeah, and then all you have to do then is you just have to identify. So that's your higher high, and then that there is your lower low.
Yep.
So that becomes our range. And now, because that's our lower low, you go, all right, well, price has to make its way back up to here to do something.
Yep.
No, does that make sense?
Yep.
Yep. So that's why you go, right, you'd have a look more in this area. You'd have a look more in this area. You just keep going down.
Point of interest.
Yeah, you just keep going down in time frames. You know, like you just go 45. All right, it's nothing clear there. You still got this candle, so that might be the one. You know, and what you could do then is be like, all right, like you could start off being like, all right, that's my first candle, for instance.
Yep.
And you go 30. You go, oh no, look, like that's a better candle. You know, right before the move. And then you essentially just keep bringing it down, really. But I mean, in this example, it's reacted off the 30-minute. See there?
Yeah.
In this example, it's reacted off that candle. Whereas if I was to break it down to the 15-minute, and this is where you can get into a bit of trouble.
That's what I'm just looking at there, thinking I'd nearly just stick to the bloody 30 minutes.
Yeah.
I feel like you'd hit a lot more entry points than you'd miss.
Yeah.
as
So
opposed to lower time frames.
so that's what we're like Reese and Kichi and that. Okay. So what they do is they will have their high time frame point of interest, so 30-minute.
Yep.
All right. So they'd have their 30-minute like this. Okay. And then they would just wait until price came into here. And then once it got into this box, like once it hits into this big rectangle and it's in this box here, that's when they start dropping down in time frames. And then and then for a better confirmation, all right, they wait for it to do essentially do that. So let me try and get the idea. There we go. So it's come into here. This one isn't actually a very good example because it hasn't actually broken its structure. Yeah, it did here, I guess. Yeah, this one's not very clean, but I'll show you anyway. But imagine this here went below this.
Yep. I know what you're going to say there.
You know what I mean? Then it's just exactly the same thing. That's why they say it's fractal. Is then this becomes, if it breaks structure here, okay, that's your higher high, all right? It comes down, it breaks through that. Well, then and then it creates a lower low. Then what's it going to do? It's going to go back up.
Go back and then come down.
And then come down. And then that's where, argument's sake, all right, let me just get rid of this. And this is where you start training your eye. You know what I mean? So then, argument's sake, oh, come on, get rid of these bad boys. You then, as opposed to the 30-minute candle, all right, so you've gone, all right, it's come into this point of interest. That is the last up candle before the down move that we're just making an assumption, okay, that it's broken through structure, all right?
Yeah.
You go, right, so once it breaks through this structure, it's going to come up. And then that's where you go here.
There's your entry point.
There's your entry point, the bottom, the open of that candle, all right? And there's an imbalance here as well, which is really cool, all right? And then that's where you target that line, them lower lows, and then look at the difference.
Yeah, righto. And you're still only going for 65 pips.
Yeah.
But because you're so tight.
As opposed to it being that.
Yeah. Yeah, so that's the only difference is because you're getting so much tighter in your entry point and your stop, your risk to reward so much higher.
Yeah, because also too, the good thing with it, and this is actually a poor example. I can give you an example after this, but well, it's not actually, because look, here's a really interesting thing. See that candle?
Yeah.
Watch what happens when I put the line on that little fucking candle there. Look at that.
Yep. Come back up untouched.
Look at that, you little bastard. Do you see what I mean there? Look, see that candle?
So it's come back and retested it.
The last candle before that move. That move there, that broke structure.
Yeah.
Look at where it came into. Absolutely perfect. Absolutely perfect. So for what Matthew's talking about too is to give you more confirmation, all right, that the trade will go the way you want it to go. Because essentially this here could just keep going up.
Yeah.
You know what I mean? It could just continue to go, like no matter what. Because also too, we haven't created, we've broken structure, and then there's still these highs Blah, blah. The market's not going to give you anything. You have to take out of it what you can.
Yeah. Yep.
So if it comes into this point of interest and then it breaks structure, all right, it comes in here and then it breaks structure, breaks past this.
Yep.
Then it's more than likely going to come up here and then come down. It's just a confirmation. So to give you an opportunity to get higher winning, more percentage winning trades, as opposed to if you were just to go, all right, yep, that's my last down. That's my last down candle. I'll put my entry into here. Where am I gonna target? Still got to target above those highs. You know what I mean?
Yep.
And then you have to play it off there. Whereas that's essentially what you're going to have to do if you just put like a limit order in or something off that candle.
Yep.
Does that make sense?
Yeah, I'll follow on that.
What I'll get you to do is I'll get you to mark that up. So you can see. So I'll stop share. And you can have a crack.
So, well, how far back were we? Because you were taking some out, hadn't you?
Yeah, if you want to, you could do it on this too. So see the two arrows at the top. See where your arrow is? Just go straight up. Straight up, straight up. The two little triangles pointing to the left.
Oh, this, yep.
Yep, click on that. Yep. And then if you click on that once and move it down, that red bar, move it to that last, see the long blue candle? Yep, move it just to the right of that one. One more candle. Yep, perfect. Oh, why can't you do it by the hour? Oh, you dog. Oh, you can't do it. It's all right.
Spewing. That's all right. If I know where it is, I should be able to. So, and I should be going down to like the 30-minute now, hey?
Yeah. So you want to mark up your point of interest. So do what I did. Do what I did in the beginning. So go back to the hour. It's really good practice. So go back to the hour.
So I'll just disregard all this for now.
Yeah, don't worry about that. It's just for a bit of practice.
So yeah, we broke structure. So essentially where point of interest will be, or would be that at that point, wouldn't it?
Yeah, so that candle, perfect. And then that's when you're there. Then you just go down. And that's where you go, right. Yeah, so then if you got that candle, all right, what you then do is use not a horizontal line. If you see, click on the
horizontal ray.
Yeah, get the horizontal ray. Put the magnet on as well, down on the left with the tools. Yep. And then you go right underneath the thing, and you just click it. Yeah, so that's at the wick.
Which so you said the magnet just like automatically lines it up on the bottom, eh?
Yeah, so the magnet goes to either the wick or the body or the close.
Yeah.
So turn off the magnet now because it's a pain in the ass if it stays on.
So, would I leave it at the 15-minute? Probably would, hey.
Well, for us,
me, I probably would, hey.
Yeah, okay. Well, if this is what you would do, all right, then just go through it. You know what I mean? Just to see what would happen, and then that's when you go back and you go, oh, right, well, I missed it.
At that point, I'd be going back to that, wouldn't I?
No, because that's because you've zoomed in, all right, because you've zoomed in on the chart, that looks like your point of interest. But if you zoom out, see what I mean? That's not your point of interest.
Yeah. So that's already at sort of your breaker structure.
Yeah.
Yeah.
And then from there, what would you do?
So then you'd be coming across. So if that was the case and I'd put that on off the wick, I wouldn't have even hit that, would I?
No, but that's because you've put the candle. That's because you've gone off the candle. That isn't the one. Isn't the candle that made the move. You know what I mean? Because because we know now that it's gone off a 5-minute candle. But realistically, you should keep it at a higher time frame. So you should keep it at like the 30 minute. No, I think you've gone too far left. I think you need to go back to the right. Also, too, if you just move your mouse, all right, down to the bottom of the chart, say, yep, so you can move up a little bit more, move to the left a little bit. No, move to the left a little bit from there. Left. Yep, see the arrow, the circular arrow on the right. Yep, click that. And it'll take you back there.
Righto. Here's one I didn't know.
Yeah, mate, believe me. It's handy, especially when you start dropping down time frames. You're like, where the fuck am I?
Yeah, righto. So going back now, if I had left it on the 30, that would have been better.
Yeah, I mean, look, this also too. This is all hindsight. Like we've gone through this, you know what I mean. But if you're doing this live, better to have a bigger point of interest, and then mark up littler points within that bigger point. You know what I mean? So, for instance, you could just draw a square from that 30-minute candle right across, and then within that 30-minute candle, do a horizontal ray at the open of the 15-minute candle. Do you know what I'm saying? So that way you're like, right, like if it reacts from this 30-minute candle, then that's where it's reacting from. However, if it goes through,
so as in like if I would go like that across, would I?
Yep, for your 30-minute candle. Also, too, to make your screen wider, on the top right corner, see how it has like a square and it has lines in the middle of it? On the right side of your window, keep going right. Oh, yeah, cool. There you go.
Was that what I was supposed to do?
No, because you've lost all your tools. Press exit on your keyboard. No?
Didn't get me out. No.
How do you get out of magnifying? Yeah, maybe there, on the left there.
Fuck, what have I done now?
Yeah, click on the little green button. If you go up to the top, like move your arrow up to the top of the screen. Yeah, then see our trading view. Yeah, there should sort you out. Oh no. Oh yeah, there you go. Yeah, no. So on the right hand side, see where it says watch list, and then it has the plus symbol, and then the square of the lines. Yeah, click the square of the line.
That's better.
There you go. Because you don't need all that shit whilst you're doing this. You want more space for the chart.
So just basically bring it across there, and then you're saying then you could go down to your 15-minute and draw your horizontal ray.
Yeah, from the 15-minute. I mean, what we could have done also too. Yeah, so move to your left from that point there. Yep, move to your left. Perfect. And to make it easier, put the magnet on so you don't have to zoom in too far to get the right point, you know.
I'll just delete that.
And then, like, realistically, we should have gone in a bit further. And so, like, drop down to the 5-minute. Look at you, natural, mate. Flying through it now.
Oh.
You go, keep moving left. Keep moving left. So that's where we enter. So keep moving left. This is where, like, it's handy for the replay tool. And then, yeah, and then you could go, oh, okay, look. And then you're like, right, well, that's a 15-minute. And then you have that 5, you see?
Yeah.
So do a horizontal ray from the 5 as well. That tiny little.
That would be that one?
No. So go to that tiny little one.
That one.
Yeah. The candle, it's the candle, the last up candle before the big move.
Okay.
That breaks structure. Okay. So if you go back to that point, it's actually, it'll be interesting to see this too. Get your fib. So zoom out a little bit more. Actually, hit that little arrow thing that circles to reset you to the page. All right. Go back to the 30-minute time frame. Yep. Okay. Now get your fib out. All right, and do it from the top of the tallest wick. One above that. Yep. Yep. Good retracement. The
tallest wick. That was in this one.
Yep. If you put the magnet onto it, it makes it easier as well. Tallest wick, and drop it down to the bottom of that wick.
Bottom of what wick?
The longest, the lower low. The low.
What
right
the hell's going on there?
Yeah, because you got magnet, so it's going from the top of the candles. If you move your thing to the bottom of that one, there you go. You haven't got your things marked out. But double click on your fib retracement. Yeah, double click on that. To open up your settings for it. Yep. Click the little gear up the top there. Yep. All right, click on style. All right, and unclick the 23.6, the 38.2. 38.2. Yep. Get rid of the 618, the 1.618. Get rid of all those ones after the 1. And you want to add in 86, I think it is. Chart. Yeah, you want to add in. Is it not there? No, it's not there. Click on 0.382. Yeah, click on that and change that value to 886. 0.886. Yeah, click OK. See if that works. Perfect. So see there, right? So have you read gone through the video of the Fibonacci with the fib?
I think so.
So your fib levels, right, are essentially just your you could look at it as sales. Okay, so
Yep.
50%, all right, is 50% off the price. So
Yep.
obviously, the higher it goes up, all right, the higher it goes up, the more percentage off the price you'll get. Now, it's very fortunate that the 88.6 falls in line with the 15-minute candle horizontal ray. You see that?
Yep.
But obviously, it didn't react off there, so that we know of. So what you want to be looking for, a really good price action is within the 0.8786 and the 88.6 level. So
Somewhere within there.
somewhere within there is a really good price reduction, you know?
Yep.
Now, if your limit or if your horizontal ray lines up with one of those lines, it's another good confirmation. You know what I mean? Does that make sense?
Yeah.
So yeah, so you could get rid of the Fibonacci now. Is this all making sense to you? This is just how
Yeah.
to find more confirmations.
I'll probably watch it back over a few times once I get the recording, but it is making sense.
Yeah. Yeah, and then so from there, so you've marked out your points of interest.
Yep.
And now go over to where it goes into your point of interest.
Yep. So over here.
Yeah.
So this one's come up, hit it, come back up again. So if that's on a 30 and you saw that, yeah, righto.
I'd be looking then I'd be watching it. So like what time does that come into 9 a.m. your time? Is that right?
It looks like it, yeah. 9 a.m. my time is when it's hit that 5-minute one.
Is that clock right for you? See the UTC?
Nah, it's an hour out.
It's an hour out. Right.
That says 11:33. It's 10:33 here now.
So that would be 10 a.m. your time when that black candle comes into that box, yeah?
Nah, it'd be 8 a.m.
Oh, it'd be 8 a.m.
Yeah.
Oh, okay. So yeah, so 8 a.m. for you. That's now 8 a.m. for you is, oh Jesus, that's still Sydney session. Yeah, it doesn't matter. Sorry, it was just a bit of train of thought. Yeah, so now you'd be watching price come up and into that area, and then you would break it down. So you'd be like, all right, 30 minutes, it's come up into that area, drop down in time frames to a 5. So this is where the replay mode is so much better.
Yeah.
This is the easier.
Nah, I think I'll definitely jump on and fucking do it just to make life easier. So that's where you go back to here.
Yeah, and then here you just wait. So you'd be like, right, that 5-minute blue candle would go up. Yeah, and then what are you waiting for?
What do you mean it would go up? Like as in it's hit it?
Yeah, it goes into your point of interest.
Yeah.
So
then you want to see it come away and then retest.
Yep. And then
so would you then be changing your point of interest to say here?
What I would do then is I would draw a horizontal ray from that point, that bottom of that blue candle. And then I would draw up my short position, use my short position tool to measure up my my stop loss.
Would you be going off there?
Yep.
Or off your 5? Going off there?
Yeah, you go off there because now that becomes your point of interest because we're just saying for argument's sake it's broken structure, so it shouldn't go above that point because then it's going to break structure again.
Yeah.
Does that make sense? So you're hoping that it follows structure.
Yeah.
Then you could and then you just figure out. So you just make that above those, just above those highs. All right. Also too, so from there, okay, I've got, from there, I'd be like, right, my stop loss is 3.6, and that's where I go on my risk management app, and I put in my amounts and my thingos, the amounts, the stop loss, and then I see my lot size.
Yep.
And then I put that into my MetaTrader, and then I find my take profit.
As in, you put it in here.
No. So I would do that quickly because if you drop down on the time frames, you might only have a few minutes to put on the trade.
Yeah.
And to put on the trade, you only need to have your entry price and your stop loss. You can modify your take profit later.
Yeah.
So in order to do the risk management side of things, where you have to import the data and then it gives you your lot size, then you go on MetaTrader, put in your lot size, whether or not you want to do it as a buy or sell limit or a market execution, depending on how much time you have. Put in entry price, your stop loss, and then you figure out your take profit later.
Okay, so you just get in the trade and then you modify it to suit.
Yeah.
Come back over here then and then go, righto, there's my imbalance. There.
So see that one there. So if you drag your take profit to the bottom of that big imbalance on the left, like
here.
No, go to the next one because that's more imbalance. Yeah. See
okay.
That? So drop that box down to there.
To the very bottom of it?
Yeah, there you go. That'll do. Look at that, bros. 10-1.
Yep.
Within the course of, what's that, 5 minutes? You got what? 5, 10, 15, 20, probably an hour?
Yep. Roughly. And so you go that one, even though there's a candle there?
Yeah, that if we're on the, so what we've done, okay, is we've analyzed that the market has broken structure from a bullish to a bearish direction, okay? So we're anticipating that the market is going to continue to go down to follow bearish structure, all right? So it's come into our point of interest. It's then, so the top, let me show you my screen quickly because I'll show you, it's better with the drawings. Oh, I wonder if I could, hold up, can I play with on your one? Let me go back to your screen. If I can. No, it didn't let me. Sorry, mate.
No, you're all right.
Go back off. Show screen. All right, so essentially we've come off that part there. So you want to, like I was saying before, you want to line up your time frames. All right. So if we know that the 30-minute is now become bearish.
Yep.
All right. We want to wait for. So we know that the 30-minute time frame is bearish, okay? But we see here that the 5-minute is bullish. You know what I mean? So you want to try and wait for that to become bearish. So that's why we wait for that break of structure.
Yeah, rightio.
So then it's exactly the same. So what is happening here, all right? What is happening in this part, all right? You essentially want it to happen in this part.
Yeah, rightio. So that's essentially your back testing.
Yeah. Well, yeah.
Same to happen in smaller time frames further over.
You want to match up. You want to match up as many time frames as possible, because what's going to happen is, in an hour or a daily, right? You'll be seeing this, all right? You'll be seeing this, and all it is, bro, is structure. Okay, that's all it is. But within the littler time frames, you're going to be seeing this littler movements. You know what I mean? Going up, going back, going up, going back. Okay, and that's how it's creating structure. So that could be your daily, and that could be your hourly, and then it's the same thing. If that's your hourly, that's your 5 minutes.
Yeah, right. Yeah.
Does that make sense?
Yep.
Yeah. So that's why from there, you've gone right. That's broken structure, and that's where you go. Okay, that's going to go to there, and then within a couple minutes, you've made. Oh, let's fix that up. That's why Matthew, if you go through that video again, he's saying that's why you wait until this happens
on that smaller time frame.
Yeah, because that's when you've got the higher probability. There's higher probability that the trade's going to go in your direction.
Yeah, that's awesome.
Does that make? There's a lot, I understand, but does that make sense?
No, it's good. That's what I need. Like, because it's all well and good for me to jump on there and go, right, I can see this, I can see that, but knowing how to sort of put it into action is different.
Well, I'll show an example. I'll show an example of one that I actually took, and I'll show you why I did it. Where was it? I just forget which one it was. This week.
In terms of, you know how they sort of say, like, try to master it just a couple of pairs rather than doing every single different one. Is there ones that you would recommend over others, or is it completely just a personal preference?
So I've copied. So these are all the majors. You see on my screen here? These are the majors. These are the ones you should definitely be looking at, especially these four. Now,
Euro USD, GBP USD, AUD USD, and USD CAD. Okay.
Yeah, you should definitely be looking at these ones for sure.
I'd been looking at the top two, and I'd been looking at EJ.
Yeah, like that.
And I think I was looking at one more, but I can't remember what one it was now.
Like these two here are the favorites, because these ones here is more people playing in this, so there's more opportunities to see potential entries.
Yeah.
Not many people are playing in this, so price could go all over the shop.
Yeah.
And also too, you don't want to have a gazillion pairs because you don't have that much time.
Yeah, well, that's why I sort of wanted to just find out what ones were the best to look at and sort of just stick to them.
Like, in all honesty, I really like EU, GU, and AU. I don't usually look at these ones too much.
Yep.
Especially AU. I've been loving AU. Like, I'm actually in this trade right now.
Yeah, righto.
And I'll show you why I got into this one. So, same thing. Weekly. All right. I know that it's very bullish. It's just going.
Yep.
It's just essentially one line. And then I've gone right. Daily. I knew yesterday that it took out these highs. So I'm assuming it's going to be continually bullish, the bullish trend, because this is the daily. So I've got lower low, lower high. Lower low, higher high. So it's broken through this structure.
Yep.
Then it's come down and it's made a higher low, and then it's just gone past there, which is a higher high, higher low, higher high. So I've got follow-on bullish trend. This is my range, is through here. Drop down to the 4 hour. All right, I can't see anything within here. I noticed that there's liquidity, blah, blah, blah. Keep dropping it down. All right, this is all pretty balanced price action. Plus there's a lower low here, a higher low here. So price would have to come through this in order for me to be looking at it.
Yep.
So then this morning I jumped on, and I was like, right, it's not going to come through to here. I've got this lower low. I did notice, this morning when I jumped on, price was right here. Price was right here this morning when I jumped on at 7. And I've gone exactly the same thing. Right. What was the last candle before this big move? Was this one? So this is a 15-minute candle.
Yep.
And I just dropped it down. And I noticed this one here, the ray. Okay. Plus this imbalance. There's imbalance here. So that's what Matthew was talking about.
Yep.
And then I let it go. See there? Came into my point of interest.
Yep.
And then it actually went further. And then I was like, right, now I'm going to wait for a break of structure. So structure break is actually here, up here. Take that off. On the 1 minute, break of structure has to come above here. So it just kept coming. I was like, oh, you beauty, it's come up. It broke structure.
Yep.
Okay. So I was sitting here for freaking 30 odd minutes waiting for this to come back down to here. All right. I thought, right, I seen that broken structure. I've gone, okay, that's the last candle, down candle before this up move.
Yep.
Plus an imbalance. So I went buy, stops just below the low, and then figure out where my thinger is later. But then I would put, right, 2.2, my entry is at 7.373. And then I just watched it and I just waited. I actually put a limit on, but then price decided to just do whatever the hell it wanted to do, and it just took off.
Yeah, righto.
So then I go, right, it's taken off, and it kept taking off actually. And it broke this structure.
Yep.
So I've gone, right, it's broken that structure as well. What are my next points? Because the boys actually spoke about it the other night about you have an extreme and you have a divisional point of interest. It was really interesting. So,
which is what?
So that's our lower low, yeah? That's
Yep.
our lower low. And I believe this becomes a higher high. Probably not, but well, anyway. Oh, see, yeah, it does. Okay, so that becomes our higher high. All right. Divisional and extreme. If I go down to the 1 minute, this here is the extreme. So price is potentially going to come down to here, but that's the extreme point of interest.
Yep.
There is also all of this imbalance through here and all of this imbalance through here. And then I took a 3-minute candle. I think it was, yeah, this 3-minute candle. I took this 3-minute candle, okay, as the divisional, all right, because it was the last candle before it broke this structure.
Okay, yeah. But why did you choose that structure break?
Because on the 3-minute, that's...
Oh, because that's, yeah.
On the,
yeah, righto.
Yeah, because
higher low.
high, low, higher,
Yeah.
lower, high, lower, low.
Yep.
See what I mean?
Yep.
So that's why I went off there. I've gone, right, there's a candle here. It's actually taken out some liquidity as well. See that there? Just a little bit,
Yep.
but still took out some liquidity. And then it's just gone. Like, that's a big move.
Yep.
And so it's like, oh, well, because if it comes through here, then it's more than likely going to come to this bit here. And then if we play it out, I actually didn't know I was in this trade. This just clapped me in whilst I'm on the phone to you. I don't know what's happening here. Yeah, and then see, so it's just done its thing, and it's eventually come down into this point of interest or into this 3-minute candle, and now all I want it to do is just fucking skyrocket.
Yeah. And so where have you set your TP off on that?
I've gone a bit greedy in this one, and I was like, oh, I looked at the highs. So at first I was like, oh, I'll target these highs, but it's only like 20 pips, I think, from where my line was.
Yep.
Yeah, look, it's only like 20 pips or 70 pips by the looks of it. So I was like, if it's following bullish trend, it's more than likely going to continue higher. So I was like, right, well, is there another point of interest, okay, higher up that it could potentially be going to? And see this, I went to the weekly. See that imbalance?
Yep.
That's all in balance. So price has to come up there at some stage. And if it's following structure, it's heading there.
Yep.
But for me, so that's a long term sort of point of interest. But what I did was I put it to, oh no, I did do it to the highs. Sorry, 737. Yeah, I did too. I did it to the highs, which is a 10 to 1.
Yep.
Not being greedy, just, nice little 10% for the day would just be fantastic.
Yeah, 100%.
What you could do then is say this gets above this structure, you could then continue to move this higher, because you do have potentially.
Yeah, well, and you can move your stop up into profit and just keep following it.
Which turns that from a 10 to 1 into a 45 to 1.
Yep.
You could just take partials, or you move it once it goes past, say, this break. Once it goes past this structure, you move that to break even, and then you just start taking partials all the way up.
Yep.
Make sense?
That's what I was going to ask you. How do you take partials?
Well, funny thing, I thought you just I just thought you moved your stop loss. For me, that was like, oh, I'll just move my stop loss. But the boys actually talked about it on the call last night. On the app, on the MetaTrader app. Okay.
Yep.
If you click on one of your trades, all right, you click on you click on close.
Yep.
What you do then is you change your lot size to take out money. So if I was to like that. This trade that I got on now, the AUD, I've got a 0.15 on it. If I was to change that to say 0.5, I would take out. It comes up as like $1 profit. So if you're looking at a 10-to-1, for instance, and you've got a say $200 account, a 10-to-1 is $200. $20. Yeah.
Mm-hmm.
Now, if you close,
Yep.
if you change your lot size, and you can just keep changing your lot size to figure out how much profit you take out. But if you change your lot size down to say whatever, and it comes up as $2, close with $2
Yep.
profit, then you've essentially taken out 1%, I believe.
Yeah, radio. That's cool. So you're still in the trade, but you've taken some of it out.
Yeah. Yeah, essentially. I'm hoping to have a go.
Yeah.
I'm hoping to have a go with it on this AD. It'd be great. Because I've never done it before. I thought you just moved stop loss to break even. Oh, I thought you just moved stop loss in profit.
I'd heard him talk about it, but I didn't really know what it meant or how you did it.
Yeah, because I messaged Reese after I told you, and you were like, "Oh, I'll ask you tomorrow." I was like, "Oh fuck, I don't actually know." and Reese just shot us a message back saying, "Yeah, explain it all." And I think he's going to create a video for us to show us exactly how to do it. But Webbo and that other fella Matt King and Kingy, they did it this week, and they did it correctly. So. We just asked them as well.
Yeah, sweet. That's a handy one to know, but like if you like where you've got your equal highs and you go, right, let's hit that point, I'll just take some partials and let it keep running.
Yeah, especially too, like if you get in most trades and you're taking out 1-2%, all right, you're profiting. You're always winning. Always.
That's it.
So,
and it saves you moving your stop loss too, because then you can allow it to retrace if it goes back up.
Yeah. Well, what Kichi said yesterday too was he said what you can do is take out profits, right? So just continue to take out profits, and then move your entry point, I think it is, to there. So leave your stop loss on.
Yeah.
Because then if it comes down and taps it out, you've still taken this profit. You know what I mean?
Yeah.
As opposed to moving your stop loss up to here, leave it there, but then just move, say, your entry point, I guess it would be, to like here, you know? And then if it keeps, but you've taken out this 2% profit.
Yeah, radio. So why do you move your entry point then?
Oh, just for shits and giggles. Like if you take out 2%, just so you see, like what it can,
where you're at, sort of thing,
where you're at, I guess, because that really doesn't matter.
Yeah.
To be fair, once you take profit out, don't you?
Yeah. No, that's cool to know, but
yeah,
because I would have just always moved my stop.
You know, it's lucky you asked me. Otherwise, I would have been doing the same thing.
Well, not that that's a bad option. Like, I mean, you keep moving your stop, and eventually, once that's in profit, you're still taking profit as well. But it's cool to sort of know you've got options.
Yeah, but like, say for instance, like here's a good example. Say for instance, all right, you've got in. I don't know, let's just say you've got in here. Okay, let's just say you've gotten here and you've gone, right, I'm going to target the highs. And then you've gone, oh, you beauty, it's gone past my this point of structure. It's created a new high. And then you've gone, right, I'll just move my stop loss to entry. And then all of a sudden it comes to here and takes you out.
Yeah.
You'd be filthy.
Yeah.
And then it decides to take off and make its move.
Yeah.
Whereas if you're in here and you've taken 3% already, you don't really give a fuck what it does. You just leave your
Exactly.
stopwatch on.
Yeah.
But yeah, mate. If that might do us for today.
Sweet. That's good. Yeah, if you can, I'll get you to flick that recording through because that's been awesome tonight.
Yeah.
And that's where I fucked up last time was I got you to teach me it all, and then I couldn't remember it when I went to look at the charts next.
Yeah, I'll actually stop the recording.